Well, thank you very, very much, Mark, for a really wonderful opening to what is clearly an interesting topic for all of us, I think, which is the role of the state in so much of our risk provision. I was just wondering if you could just open up with just a couple of things about Flood Re itself, if you don't mind. The first is, you say that it's the insurers that are paying the claims. So how does that claim process work?
So the process will work this way, that in the event of a flood, a customer will ring up their insurer, log their claim. The insurer will pay that claim, and assuming they have reinsured that policy with Flood Re, we will settle with the insurer. So it's a really important point is that the relationship between the customer and their insurer remains unchanged. And so we are, although we have a strong public policy remit and a strong interest in making sure consumers get a good deal, so we are a reinsurer.
Now, you mentioned as well, of course, this £180 million levy on the industry. So somebody's paying for this. Is this a transfer effectively from some customers to others?
Well, I think that will depend on an insurer by insurer case and how they decide to meet the cost of that levy. And that, I'm sure, is a conversation that executive committees across London will be thinking about at the moment. To what extent can they pass in a soft market that levy onto their customers? Or to what extent do they and their shareholders bear that cost? So it's a judgment they will have to make in the end.
Okay. One of the most interesting things has been throughout the financial services world, we've obviously had a lot of turmoil the last 7 or 8 years, and there's been obviously a tremendous amount of resistance to financial jiggery-pokery and people up to complicated things. In the banking sector, that has arguably led to almost a stymie of new banking entities. I think America's had 1 new bank in 5 years. I don't believe Germany's had any new banks. And in Britain, we've had a welter of small banks, possibly as many as, a huge number, like 20, but very few of whom seem to launch. Now, you've been working with the regulator on a brand new and an enormous product. How have you found it setting up a new business?
It's an interesting challenge, and I sort of feel sort of poacher turn gamekeeper turn poacher here, having sort of set up the regulatory framework, having spent time at the Treasury trying to work out how the application process should work if you're going to be regulated by both the PRA and the FCA. I now experience it, Michael, at the sharp end. We are wading through that process as we speak. I think it is challenging, and we are, in a way, fortunate. We know where our capital is going to come from. We know how the business is going to be financed. And I do think that it is a difficult process. And the team at Flood Re are doing a fantastic job in trying to ensure we're going to deliver on time and launch on time. But I think that the biggest challenge, I think, is the understanding of risk and what that means for the business and what does that mean for the financial model. We've spent a lot of time thinking about where, the frequency of weather events, where they impact, who they will impact, what will insurers cede to us, and understanding what the capital implications of that are just really interesting intellectual challenges for the team, and sort of demonstrate a real opportunity, I think, to have in one entity a really comprehensive understanding of flood risk in a way that I don't think actually exists in the market at the moment in terms of some of the models that are out there. So we will, I think, be an opportunity to really contribute to public policy, not just by providing reinsurance and helping insurers deliver affordable flood insurance to their customers, but also I think we have an opportunity to help inform debates about where flood defence spending will be. How do we make people, homes and communities much more resilient? So I think there's a really strong public interest there in the information that we have and how we deploy that.
Oh, well, that also touches, of course, to a degree on your big data point. I mean, on the way here, somebody was mentioning to me his difficulties with a tenant who'd been quoted by postcode. So although that particular cottage had never been flooded, the postcode had been, and therefore they were being quoted absurd rates. So you're hoping to get a greater level of granularity on both the houses and the flood risks nationally. Is that correct?
That's right, and I think it's one of the interesting things about talking to the insurance market and the people who will be effectively our sort of owners is their different approaches to the collection of data, and some are very granular. Mm-hmm. Some insurers will just say, I live on a slope. and the 21 houses where I live, all in the same postcode sector, some insurers will know that I'm further up the slope than the house opposite me. And with that degree of information, you can quote a price tailored to the location of that property. And that's, I think, one of the things that has driven the need for flood re is actually the more accurate you can be in identification of the flood risk, then the more that premium can be tailored to that level of risk, creating issues around affordability and creating issues around the excess. So I talked earlier on in my speech about people paying having a five-figure excess. One of the conditions of flood re is that no one will have an excess for flood damage of more than £250. So actually that's quite a big shift. So a lot of people who are now feeling they are self-insured to quite a high level will now have a much lower excess, assuming their insurer reinsures a flood re. So anyone here who's a customer in a high flood risk area, make sure you ask your insurer about this when we get to the start of next year. So we do need to see consumer demand created.
But within that, does that not imply that hitherto that's not been a particularly competitive market, that the insurers aren't pricing it very accurately and are able to reject things or charge higher premiums than are necessary?
It's been a strange market, Michael, because the statement of principles that governs flood insurance at the moment, that guarantees the accessibility of flood insurance, has been in place for well over a decade, and it only applies to insurers who are in place when that statement of principles was signed. So people who are currently, relatively new insurers don't have that obligation, so that creates a bit of an issue for the existing players in the market who feel all this risk is concentrated on them. But I do think that one of the things that Flood Re will help create is the landscape for a more competitive flood risk market. And I suspect there are people currently not writing very much flood risk business who will now see this as an opportunity to get into that market.
This is a bit of an aside, and I don't want to dwell on it too long, but I know some people in the audience would be interested and have asked about two areas. One is just the scientific issues here for a moment. Are you getting a reasonable amount of good data to do that type of risk and modeling, or do you see some gaps? And secondly, a number of people have asked me about kind of what has all this got to do with climate change and what are your views on that? And I don't want to spend too long on it, but I wouldn't mind just a quick reaction.
So I think one of the challenges for us, and given we know a 25-year life cycle, we're going to be in this business for that period, is to understand where science is developing, what impact that has on our model and our understanding of flood risk, but also recognising that over the next 5 years, the impact of climate change on our business model won't be that significant, so we don't need to think about the levy or the premiums. But we do need to think about weather patterns, and the severity of weather. That could actually be quite a big factor for us.
Now, your central thesis was very much that we've changed from looking at insurance strictly as a private contract between the insurer and the insured, and it's now really about allocating risk between the insurer, the insured, and government. And I thought that was really quite a compelling thesis to explore. I was curious, though, do you feel that some of that's just due to the increasing scale of government? Government is taking such a wallop out of GDP that, frankly, it's party to every transaction at the moment.
No, because I think that there are lots of other things where they don't take an interest, or as explicitly. I think that if you're thinking about how do you provide peace of mind to people, how do you ensure that they feel confident about the security of their home or their possessions if enter a flood. If you think about what happens in a road accident, so if there wasn't motor insurance and I was knocked over, then if the driver was wealthy, I'd probably have a good shot at getting damages. Mm-hmm. If he wasn't, then I'd be stuck with a life-threatening injury or debilitating injury, which would perhaps the state would incur additional costs. So I think there is something about how does the state sort of manage its costs and exposure, but how do you also create a framework where people can have peace of mind in a transaction like that?
Okay. So obviously, as you emphasize, very, very important to let the private sector mechanisms of delivery and risk assessment and processing work within that framework?
Absolutely, and I'm very pro-market, but I also recognise the limitations of the market. So there are times when the market doesn't function properly, where you need to think about, does government intervention work, and is government intervention better than simply allowing the market to continue to function?
Well, that echoes a statement that Con Keating was making to me just before we began, where he said, that a public good, is always going to be undersupplied by the private sector. But of course, the corollary to that is that, the public sector will always oversupply a good that gets votes. So how do we control...
That's our business.
How do we control that vote-seeking element? Well,
I think that... so it's a good question, and I think it's about where you strike that balance. To what extent are you able to, I suppose, interfere with the market and how that happens? So I think the flood re mechanism is one that addresses some problems with the functioning of market. I think that it allows insurers to decide what to reinsure and not with us and what not to reinsure. So there's a balance to be struck there, and I think that that's quite important. It's why I think there needs to be in these areas quite a sophisticated understanding of each other's positions to work out what is the optimal solution, and what's going to deliver the best benefits for the consumers at a reasonable price for either the industry or the taxpayer to bear. So it's a process of negotiation and discussion. And, Flood Re wasn't agreed overnight. It took a while to get there, which I think is an indication of the care that both government and industry take about these matters.
You've used the word balance, equilibrium, quite a bit, indicating how sensitive getting this right is. And I was delighted that you pointed out it's not just flood or Julian's sort of terrorism, but it's also pensions, healthcare provision, care homes. I mean, it's a very rich area that we're looking at here. And yet we've also seen a lot of mistakes in schemes like that. The Green Deal comes to mind as a bit of a fiasco, and there have been quite a few in government. Can you look at successes and failures and indicate, whereas either government doesn't have the skills to do it or it's biting off more than it can chew? I mean, I think you were very good at saying, we need clarity in the public sector framework about what's being delivered, but it's a bit like the IT disasters in government. Is there anything we can learn from them?
I think one of the challenges, in a way, it probably answers your previous question, Michael, is I think you've got to go with the grain of how things function, and think about what the customer need is, what are the drivers that'll get it right. It's interesting, I was talking to the Canadian version of the ABI a few months ago, and they were looking to set up a flood re-equivalent. But the dynamics of their market were different. The government was actually seen as the insurer of last resort. So why would you, as a customer, want to pay for flood insurance when currently your government picks up the bill? So if you set up a flood re-scheme in Canada, chances of it being successful are a bit limited, given those dynamics. So I think you've got to understand how the market functions and work with the grain of the market, rather than try and impose a solution which is perhaps alien to it. I think that you've got to understand the financial incentives very clearly for both the government, the customer, and the insured. And I think that's one of the reasons why I think the Green Deal didn't quite work out. No one quite understood what the incentives were. Whereas I think here the incentives are very clear. And there is a demand that we're tapping into. We know people want to insure their homes. So that identifying that demand is a key part in trying to design a scheme that'll be successful.
I mean, from the way you were talking, I could foresee a Britain with a whole bunch of knee-jerk reactions, whether it's a Green Deal or a flood re or a cyber re or something to various things. And yet we've got this pretty successful reinsurance concept. Do you foresee a future where maybe there is actually a general government reinsurer of the reinsurers, a pool that's helping to spread best practice and control and sharing, or are each of the risk areas too discrete?
I would hope not.
Okay, good.
Because first of all, and I think it's one of the reasons why government doesn't get involved in these schemes all the time, is that actually there's an aversion to expanding the size of government. and a recognition, actually, there are some things that government is good at doing, and the other things that there are other things that government is less good at doing. And you need to remember the success of the car industry today, and compare that to the car industry of the 70s and 80s, where government owned chunks of it, to be reminded of it. So I think there's a limitation, and I think what sort of risks do you want government to underwrite? This is very clear, for example, that for flood re, there's a limit to what we reinsure. Once it goes beyond that, the risk falls back to the insurers, and there isn't a blank check from government. And so I think there are some natural limits to where government should take on responsibilities and take on that liability, and particularly at a time when public finances are recovering. No one really wants to add to that risk.
An emerging area is clearly cyber, and as you're aware, Long Finance brought out a report on cyber catastrophe reinsurance for discussion, promoting UK prosperity, public-private cyber sector reinsurance. Interestingly, that didn't call for government money, but it did call for a government impetus to help develop, I guess in many ways, a scheme with characteristics like yours. But on the other hand, Pool Re, which was the closest model we could see, is much more of a cat model, and you're kind of much more of an attritional model.
We're a combination of the two, in fact. Yeah.
Now, looking at that area, what sort of lessons would you give to people in that space from your experience? Is it a sensible idea? And if it is a sensible idea, what could they learn from Flood Re's creation?
I think one of the challenges is to be clear what it is that you're insuring in that model. So, I think both what Pool Re does and what Flood Re does is very, it's very clear the risk that we are reinsuring and the nature of the losses that will emerge when that risk crystallises. If I think about the conversations I've had in boardrooms and elsewhere about cybersecurity, people have a whole range of views as to what the nature of those losses are. Is it a business is out for 2 days and can't function? Is it what happens to your customers' data when it's stolen and misused? Are you going to insure yourself for those losses? And so I think until there's a clearer view about what risk is being reinsured and the nature of those losses, I think it's difficult to see how a larger vehicle could be created. I think what is interesting, though, Michael, is the fact that these conversations are happening is a really good sign, because I think it demonstrates there's an appetite for greater clarity and certainty about this. I think about what is the right model for insurance for cyber risk.
I mean, one of the things I was struck with in your central thesis is you'll certainly recall over the last 20 or 30 years there have been a lot of conversations, books like Ulrich Beck on the Risk Society, and this whole notion that we are basically taking no responsibility for our own risk and throwing it onto the government. The discussions one has about health and safety and whether or not people are suing each other, suing government authorities, and within all that. Your thesis seems to be quite a rich one, but I was wondering if you saw one of the roles for that type of insurance in between the insured, the insurer, and government. Did you see that as a way of starting to price some of those risks so people were more responsible as citizens?
That's a really interesting question, and I sort of have to hold my hand up to being the minister responsible for health and safety for a year, which led to all sorts of interesting personal disputes. So I went to a garden centre to buy my Christmas tree. I'm not very good at manual stuff, so I always went to this garden centre because they would chop the end off, so I put it straight into the water. Otherwise, I'd spend sort of 3 hours with a hacksaw trying to get the end off and swearing quite a lot. And the year I went, when I was Minister for Health and Safety, they said they're not allowed to chop the end off. And I said, so why? And they said, health and safety. And it was rubbish. Utter rubbish. It wasn't about health and safety. Actually, it was about insurance, I suspect, Michael. But before I had a chance to remonstrate and say, do you know who I am, my wife put her hand on my arm and told me to calm down. I think that there is it's an interesting issue about risk and personal responsibility. And I think that it is easy to try and say that somebody else should manage our risk and that we have no responsibility. I think one of the challenges for flood relief, I come back to return to risk-effective pricing. I talked about flood defence schemes, and part of the deal with the government around flood relief is the government will continue to maintain its spending on flood defences. Quite important with the spending review coming up in the autumn. But what role do we ask of customers, of householders, to make sure their property is resilient? Where does that fit in? And I think that is quite a rich area of debate. And I don't think there's an easy answer. And I see it from in my former constituency. There's one village which was at risk from tidal, river, and surface water flooding, sometimes at the same time. And because the frequency of flooding was such, their properties were very resilient. They had sandbags to hand. They had the things they put down in front of their doors to stop the water coming in. They had really taken responsibility for that, which I think is a good thing. But I think one of the challenges and one of the things that we have to do as a body is to produce a transition plan to map that progress to return to risk-effective pricing in 25 years. There's a strand in that is what do we expect individuals to do, and what's the role of government in that? And we can't remove responsibility. What we do need to do is help people exercise that responsibility. I talked in my speech about in defined benefit schemes, employers bearing longevity and investment risk. Defined contribution schemes have pushed that risk back onto their employees, to consumers, to savers. I don't think actually most people are equipped to think about their responsibility for insuring themselves against longevity risk and investment risk as a normal saver. So how do we equip people to exercise that personal responsibility? And there's an education piece there, and thinking about incentives.
Well, there's even an interesting bit. I mean, when Bismarck and Stanley, one of the arguments is that he saw people over-provisioning for longevity, and the idea was to release it by saying if you got that far, so almost taking the long tail risk onto the state to avoid too much saving, which is an interesting argument. I'm not sure about how strong the history is on that, and I know somebody in the audience who would, but let's not go there. Two last questions, if I may. Well, probably three. The first question is, I was delighted when you accepted our invitation to come and chat with us today, but I saw that as a kind of a Gresham lecture thing. This is an audience that's very interested in where finance is going and all that. And yet you said to everybody, remember to ask your insurer, about whether or not flood re is involved. Would it help that everybody in the nation knew about flood re, or are you really kind of just a quiet back office wholesale operation?
No, I want everyone to know about flood re. I think it's really important, actually, because I think that the decision about whether to cede the risk of flood re is in the hands of the insurer. But we need consumer demand. We need people to understand and to ask ask about flood re, to ask whether their house could be covered by it, to create that competition. And to ensure that consumers get the full benefit of flood re. So, this does not herald a huge flood re marketing campaign. We're not going to produce a fluffy water vole or anything like that. But we will find ways of raising the profile of flood re. And I suspect also our biggest allies in this, the two biggest allies. One is my former colleagues, where there's huge support in Parliament for flood re, because my former colleagues see their constituents struggling with cost of flood insurance. They see the impact, and I think that the consumer finance pages and our popular press will come to our aid and help stimulate that demand and get people to ask the questions.
I wasn't sure whether your mascot should be a dry kangaroo rat or a great white shark, but yeah, it's a good one. And the other sort of question, just to push a little bit, is this is our 12th Sir Thomas Gresham lecture. So when we are having our 22nd, and it's your 10th year in post, how should we judge you? I mean, it's a quiet thing. There's still going to be an insurance market. People will still be arguing about their premiums being too high or what have you. There will still be some floods. So how do we say that this was a good thing to do?
I mean, I think that there are a couple of direct measures. One is about what is the take-up of flood re, and has it got the penetration that it should have? And Julie talked about 350,000 houses. Where are we on that? And then one which I think is what's the price of the flood element of domestic insurance?
Mm-hmm.
So has it delivered on its objectives of affordability and accessibility? And I think if we came back to the 30-second Gresham lecture, it would be, and so is the return to risk-reflective pricing at an affordable price within reach? And for that, if that isn't the case, then it's a failure of society, business and government as a whole to really take seriously the challenge of flooding and how to defend homes against that risk.
And perhaps I could end, if you would allow me, on a personal note. In all of this, what have you achieved? What do you regret? And where do you actually see the future? Maybe not for Floodbury, but for Mark Hoban in about 5 years' time.
Well, it's a good question, and one of the things I've really enjoyed about Floodbury is there's an opportunity to say more broadly that financial services has a positive role in helping meet consumer demands. And I think for too long there's been a disconnect between financial services and the people it's there to serve. And I think I can help through Floodbury create just one small sign of that interconnection. I think it would be a big achievement. And so that's something I would want to feel when I step down as chairman of Floodbury in due course, to feel, we've made a difference to people's lives.
Save the reputation of the city from being underwater. That sounds wonderful. Mark, thank you so much.
Thank you.
Well, ladies and gentlemen, thanks for that. It was just really, really wonderful to have somebody come and talk about what is an exciting and fiscally very interesting and large project. I'm off to Dublin on Monday. I'm an advisor to the Irish government on international finance, and it reminded me that back in 2010 I listened to a wonderful speech that Mary McAleese, then President of Ireland, made to the European Insurance Forum, and it went like this: the certainty and confidence that insurance provision brings to all our daily lives, whether business or personal, enables us to breathe more easily, to find the confidence to let innovation flourish, and to engage with the present and the future, chastened by the past, but not allowing the fear of the possible to paralyze us in the present. And while her wonderful evocation, I always say, should put thousands of insurance marketing people to shame, she does raise the interesting analogy as well of government as insurer. Our lives are enriched by being able to embrace more uncertainty, because less mundane uncertainties are handled by government, by insurers, by industry, and by our fellow man. Well, one of our fellow men was Sir Thomas, whom we honor tonight in this lecture. Gresham College was set up as the result of his 1579 will, and began trading as a lecture provider, the Tudor Open University, as I call it, in 1597. We are still interpreting what he meant by providing free education for those who live and work in the City of London, and the range of issues with which education should properly be concerned, which was then divinity, geometry, astronomy, physics, law, rhetoric, and music, has been extended over the centuries. Since the last century, my former post, commerce, and all that goes with it, has been a focus for us. And the year before last, we added environmental science, and this year, information technology. The city evolves, and Gresham College evolves with it. And I think it's lovely to be here on the leading edge of an evolution in the way in which we handle the combination of public interest and private profit. Our speaker tonight has given us, I think, a wonderful illumination of his core thesis that insurance has really changed, or certain insurances have certainly changed, from this private contract to being a three-way public contract between the insured, the insurer, and the government. And I think his exposition has been a lovely introduction for all of us into things that we'll be seeing over the months and years to come. And I guess we should all probably please ask our insurer whether or not they are ceding our policy to Flood Re. Anyway, May I thank all of you for coming tonight. We are going to reception outside. The staff are very, very patient, but it is a 45-minute reception. I know that we are all admirers of Sir Thomas, and he loved his wine and imported wine, and we've happily sold it to us, but he's dead, so he doesn't get the profits. So if you could kind of mosey along at about 7:45. But meanwhile, the speakers are joining me next door, and it should be quite a bit of fun, and please come up and ask your questions and make your comments. And I thank all of you for coming, but more importantly, could I please thank all of the staff at Gresham College and our two speakers tonight. Thank you.